Right, what is going on YouTube? Back with another video for you guys, as always. Today I want to kind of be speaking about how to correlate pairs if you are looking to trade currencies or get into trading, like becoming a day trader and stuff like that. How to correlate pairs from a beginner level, just to have a real understanding of what it is you're looking for if you trade specific pairs. Um, I like to trade GBP USD in terms of that being one of the pairs that I actively seek out from a day-to-day basis. So I need to check certain things on a chart. So I'm going to kind of give you a brief breakdown of what it is you can do to kind of increase your boot or boost your odds in regards to what you think is going to happen on a day-to-day basis. So kind of helps with your bias for the day if you have a specific bias on a GBP USD or Euro USD, how can I potentially boost the percentage of your belief in the trade, so to speak? So we're going to kind of speak on how you can do that. And one of the main reasons and the main things you should be checking on a day-to-day basis if you are trading major currencies is the US dollar index, okay? Preferably known as the DXY. You should be checking the DXY on a frequent basis if you are trading currency pairs, especially the majors. Now, the reason for that is for those that don't know, the DXY or the dollar is the world reserve currency. Okay. It's the biggest currency in the world in terms of every country, their governments and people in control of the country, they have a reserve of US dollars. Okay. And that hasn't changed. That I don't know if that's going to change in the future potentially, but right now, that is what it is. Okay. So we need to be aware of what the dollar is doing. And the main reason for that is because if we have a bias in mind, but the dollar isn't lining up with what our bias is, let's say we're bullish on GBP USD or USD JPY, you see it being a sell. There's certain things that the dollar should be showing you to confirm that, okay, if you believe in that direction, the dollar should be showing you something in that direction as well. So, what I want to kind of give to you guys is an understanding in regards to major pairs. Okay. So, the major pairs are basically the main currencies that are out there in the world. Okay. This isn't, for those that are from Mexico or those that are from Turkey or Swedish krona, like you might trade those pairs. Those are not major currencies. Okay. So, a major pair is a currency which is including the dollar, but it's also a major currency in world economy. Okay, so don't be disrespected if your home country is not a part of that. You've got GBP USD, so the Great British Pound tied against the dollar. You've got Euro USD. Okay, so again tied against the dollar. You've got the Aussie USD. You've got the New Zealand dollar, and then you've got USD CAD, USD JPY, USD Swiss franc. So I want to speak to you guys briefly about something regarding the way these pairs look. Okay, because I heard a lot of people as well, especially people that are getting into trading. They'll text me. They're like, "What do you think about the pound against the euro? Like the pound against euro? It's actually the euro against the pound. That's the actual official chart. So how you actually search and type for specific currencies paired with each other, it's all in how you write them. So you got to kind of know which ones go where. So GBP USD against, yeah, sorry, Great British Pound against the American dollar. It's written that way because when you search for it, okay, the dollar, excuse me, is on the back end. Now, when you have the dollar on the back end, okay, and you're looking at the dollar chart itself, the DXY, what you actually want to do is, let's say you have a buying bias, okay, so you want to buy GBP USD. If you're looking at that chart and then you go to the dollar, you're looking for the dollar to become weaker, okay? So you basically want the pound to get stronger against the dollar. Same with the Euro USD, same with the Aussie USD and NZD USD. Now, if you are trying to buy USD CAD, right? You don't want the dollar to get weaker. You want the dollar to get stronger. And that's the same for USD JPY and it's the same for USD Swiss franc. So basically, if the dollar gets stronger against these three, right, you're basically saying that the dollar chart is looking to go upwards. That's what you want it to be showing you. Okay. Now, let's flip that. Okay. Let's say you want to sell USD JPY, right? You want to sell USD JPY, you want the dollar to be getting weaker, okay? Because if the dollar's coming down, right, USD JPY will be coming down. Whereas if the dollar is coming down against GBP USD, it will be going upwards. And Euro USD, the ones up here, if the dollar gets weaker, the ones with the dollar on the back end of the pairs, okay, they will be getting stronger against, meaning they will be going up. If the dollar is getting weaker on these pairs, okay, it will be going down. So that's how that works, okay, just in terms of with the dollar being on the back or the dollar being on the front, that's how that works, okay? So it's really important that you don't type this out wrong, especially if you're a beginner where you've put CAD USD or JPY USD. That's not how you're actually searching for these things, okay? Because that could mess when you come to the dollar chart. There's no, there's only you can only search for the DXY itself, okay? So if you've got the wrong, you've put it the wrong way around, okay, that can affect what it starts to look like on your chart and stuff like that. So it's very important that if you are trading majors, these are the majors. So very important that you write that down. And if you don't trade majors, you like to trade minor pairs. Minor pair is basically currencies paired together that don't include the dollar. So that could be Euro GBP, it could be GBP AUD, GBP NZD, GBP CAD. I'm saying GBP because I'm from the UK, but Euro AUD, Euro NZD, these are all minor pairs, okay? It's just everything that doesn't include the dollar, GBP yen, right? So that's quite a popular one as well. So those ones where it doesn't include the dollar, you don't necessarily have to consider what the dollar is doing. You can kind of start looking at those pairs in terms of what those indexes are. But the thing is, not every currency has its own index, right? That you can, take a correlation from and pair it to the pair that you're trying to trade. So that's something to kind of consider as well. But this basically helps me if I'm trading GBP USD, right? This chart helps me understand, okay, what is my bias? What can I kind of see happening on the dollar? And then that's going to kind of help me and aid me in making a decision of what direction I'm trying to trade GBP USD in, whether I'm trying to buy it or sell it. The dollar is a really, really good um, indicator to suggest, okay, this is what I see happening today, or this is an area I'm looking to play from and stuff like that. Now, another thing that you got to be wary of when you're trading major pairs is news events, okay? Especially as you're approaching a brand new month or there's certain things that are scheduled to come out. News is a very, very heavy driver of price, and you need to always be checking for that. So there's various economic calendars you can look for. MyFX book is very popular. MyFX Street. If you've got Bloomberg, if you've got an actual terminal, that's great. But you need to check, okay, when are these things scheduled, the time that is scheduled and stuff like that, because that's going to also affect the volume of your pair and the volatility start to kick in when the news is announced as well, and things and such. But when it comes to just looking at the dollar, you definitely want to kind of do it from a higher time frame perspective, like especially if you're a day trader. Again, you want to be kind of on the 4 hour, the daily. What's the structure showing you? Any areas that have been liquidated and stuff like that, right? So when it comes to understanding where you're trying to play from with the dollar, right? Because there'll be days like if we look at what happened with these 2 days here, where the dollar doesn't do much, right? 2 days in, it kind of just did nothing, and then the next day it kind of pulled up here and then closed here, did nothing. So there'll be days where that will be able to transcend onto your pair. So for those 2 days that you're looking at the market, GBP USD, Euro USD, whatever, your pair might not be doing anything. It's because the dollar is not doing anything. Okay, so the dollar getting stronger or weaker is going to affect those pairs, but when it does nothing, it's also going to affect the pairs in the same way. So that's when you can kind of think about trading different pairs that don't include the dollar, or maybe different assets. So like commodities, you've got like oil. You can also trade like the indexes, like the Nasdaq, Dow Jones, German 30, whatever it may be, right? Those things are good. It's in my opinion, it's always good to have something outside of major currencies, just because there will be times where the dollar isn't trending. And when that happens, you don't want to kind of just be limited to, okay, the dollar isn't doing anything. So I'm not doing anything. If you are just trading one pair, then that's fair enough. But I do have two other pairs that I look at. I like to trade oil a lot. And oil does have a slight correlation to the dollar, but not necessarily in conjunction like how the major currencies do. It's because it's a commodity, it's not exactly a currency. So it's a little bit of a different asset. So there's a slight correlation, but you don't, if the dollar isn't moving, oil can still move because supply and demand and global demand and stuff like that can have an effect regardless of what the dollar is doing. So something for beginners to kind of understand is that if you are into trading currencies and you're trying to get into trading majors, you should be looking at the dollar chart, okay, on a day-to-day basis, right? Just based off of the fact that whether the dollar gets stronger or whether it gets weaker is going to affect any major pair that you're trading. Okay. So just some simple advice, guys. I don't want to make it too long, right? In regards to what I'm trying to tell you. I just want you guys to understand that this is something that is not complicated at all, but some people I know that get into trading currencies and major pairs, they don't actually look at the dollar, which is a little bit baffling. So it's just I always try and say to, people that get mentorship from me and things like that, where it's like, they'll text me their analysis and they'll be like, this is what I think about the chart. What do you think? And then I'll ask them a simple question, have you checked the dollar as well? And they'll say no. And I say, why? And they don't have an answer for that, but it's just anything that includes the dollar, you should check. It's just as simple as that. Very simple, but it's very effective because it can stop you trading in the wrong direction. Because sometimes your chart can be showing you something, your currency pair can show you something, but then the dollar gives you an inkling to say, okay, actually, I think it could do this. And then that, is gonna enhance the direction for the day that you don't get caught up in the wrong direction and stuff like that. So very simple advice, guys, but very effective when you follow it, right? So that's what I wanted to kind of bring you guys, very short and brief. I'm gonna start doing like short segments, 10-15 minute segments where I kind of give out little pointers to beginners to kind of just boost their basic understanding. I won't get into the advanced stuff yet. Like this is just basic understanding where it's like you need to understand correlation. Okay. You need to understand that the dollar is the world reserve currency. You need to understand what pairs are, how to actually write the pairs that you're searching for and you're not pairing it wrong and stuff like that. So these little tips and pointers is just for the beginner. It's not anything advanced. But I wanted to kind of give that for you guys so that when you are going on your charts, it doesn't look like a burden. Okay, this should be fun to you guys. Learning about this stuff should be fun because it really is. And when you go on to become a trader like full time, hopefully, if that's what your goal is, you'll start to love everything that you learn about it, like I do. So yeah, guys, that's what I want to do today. I want to kind of wrap it up there. If you found this video and this information useful, please like and subscribe to the channel, and I'll be bringing you more segments and more content like this very, very soon. So thank you guys for tuning in. I'll see you on the next one. Peace.